Alright, everybody, welcome back. It is Thursday, December 21st, 2023, here at precisealgorithmtrading.com. And I'm going to do something a little different tonight. When we get back to this chart, to our daily and our hourly chart, we're going to look at something different. But first, let's dive in and look at our automated trading systems. And we had a pullback after a new all-time high in our YM equity, our Dow Jones equity. This is showing 6 months of trading, and what we want is an upward sloping equity curve. That's what this is, the results of our trading. So we had a new all-time peak, and now we've got a pullback. Wish it wouldn't switch over like that. That's that pullback, and let's look at it individual trades wise. This is the third page of all the trades that made up that 6 months, and this is today's trading down here, the 21st. We had 3 losers and a winner. This is the nice pop from yesterday. Actually, 2 of those together made a really good one. So we had 1, 2, 3, 4, 5, 6 in a row negative with a nice pop, and then we've had 3 in a row negative and a little positive trade. So just pointing out, these pops are what we're waiting around for. So that's what it looks like on a chart. When it happens, it's like this and then like that, and you can see they can come together like this, but you have to endure the pullbacks for how these things are set up. Unless somebody's got a better idea, and you can always email us at precisealgorithmtrading@gmail.com. This is the Russell, and I still have work to do on this one, but it's close enough for prime time. We're still in a pullback situation here, similar to these pullbacks, not as deep as this one yet. And you can see today's trading on the 21st right there. 3 losers and a winner, not in the same order. And then the NASDAQ, which has been really on this giant downslope here lately. I really need to see that thing reverse with some gusto, and we can get one of these going. And this volatility pickup lately has been possibly enough to get that going. The individual trades are actually between 2 pages. This is 5 of 6, and there's 2 trades there. 1 big negative and a positive, small positive. And then going in different times of the day. This is the biggest negative, and it was a stop out. But then at the end of the day, there's some light at the end of the tunnel maybe for a nice positive trade. Alright, so let's go back to the regular charts. And what I want to do is take off some extraneous things. On both time frames. Get this thing to where there's really not much in the way of noise. Make it really simple to look at. Get rid of that even though I think it's simple. We want the trend finder. I'm going to get rid of some other stuff here. Alright. Now I think I only have like these labels up here, which don't really amount to much. I can actually get rid of that too. and I have this is a 2 ATR stop. I have this zigzag indicator that I've shown a little bit in the past. And the big deal with the zigzag indicator is that on every one of these swings, it draws automatically a 50% retracement line. This little one right here that's a 50% retracement line. There's something important to that. Here, I'll get rid of that too. Is that like this one, when it retraced, didn't come down to the 50% line down here of this move. So when it came down here, this still is vulnerable all the way up here to a retracement all the way down to this line, because this never pulled back 50%. And if you look at charts in history, this one came down, pulled back, and that was, I don't know if that was the 50% line. It wasn't. We'd have to go in here to actually physically draw it, because I only have it going in, I think, on the last 3 or 4 of these swings. You can see though, from here to here, and 50% would be like here, it did retrace that 50%. And so you get a push down, another push down, and a push down. That's 3 swings to the downside. Swings typically are going to be 3 or 4. And then you get a swing up and another swing up, but this one didn't retrace far enough. So when this thing does retrace, which we might be in the midst of now, it can retrace all the way down to here naturally, put in that new higher low from here, and reverse, and never negate this uptrend, this new potential uptrend. And that would be totally natural. The fact that this didn't pull back means that the banks, the big institutions, never got a chance to really get a good price, and they just ran away. The big banks and institutions want to get a better price. I think this is the marker for it. Now, this is the 2 ATR stop, which means anything that's bullish going up, generally speaking, should stop out there, because if you go beyond that, then you really risk too much in the trade in the first place. So, and then the hourly chart over here is really just to monitor those trades. This one's already, you can see that we've changed polarity. This thing was going, it takes a low, a high, a higher low, a higher high, a higher low that didn't retrace 100%, to a higher high, to another higher high that never actually retraced, to a higher low, to a higher high, and then we retraced and we took out all those pivot lows. So this is a change in polarity that happened on the E-mini futures on an hourly chart. Now we put in a potential lower high, a higher low, a higher high. So now the question is, where do we go from here? And we have retraced 50%, because that's this dotted line right here, of the previous swing. So going lower from here, because we already changed polarity, makes sense. So hopefully that makes sense to you guys. This thing's been going on for a long time here on the Weiss wave down here, and it turned red. And the fact that it's still hovering around up in here is great for bullish positions, but momentum is lowering, and this is kind of momentum with a volume. So you can see it playing out, and literally we can come all the way back here without really changing polarity on the daily chart. If you flip this thing to weekly, we were coming down. We changed polarity here because we went from a low. We did this back and forth stuff, but we ultimately came up to a higher high and a higher low, and now we're at a higher high. If this thing pulls back to the 50% line of its mark here, which I think is this one, because this one goes to that, then all we need to do is put in a higher low here, and you're still good on a weekly basis, and that lines up with the daily. So I don't want to belabor this, but that's why I'm in a position like this one. We were in a downtrend, came back up. This did not take out the previous. Came down though, put in a higher low, came up here and took out this pivot. Went up here to make a new higher high. When this came down here, actually this whole zone down through here is the buy area. This thing can come all the way down, and this is like a solid pivot where it should be because we already changed polarity here. If this thing comes down any of this zone over here, then we could bounce from there and continue higher. Now you can also monitor it off the daily, or I'm sorry, off the hourly, and that way, since I'm in profit now, I don't have to give it all back. I can literally monitor the same way off of the hourly chart. And if we take out these pivots to the downside after we have this nice pop here, then you would just get out of the trade, which is where I have my stop set. Another example would be Zillow that I showed you yesterday, where I took half my profits off the table. And literally there's no reason, so we got a pivot here and a lower pivot. You can pick any one of these three, and if this thing starts to take out this 30 period moving average right here, then you go back 2 pivots and you could set your stop here. I'm just going to move mine up. In fact, I'm going to do it now. I'm just going to move it to the most conservative, 53.99 minus a nickel, 53.94. 53.96 is fine. Send. So that's how that works. Alright, I'm going to move on. The Russell today, same looking thing. Been swinging up. I mean, literally this thing's still going even though we had a pullback yesterday. The Dow pulling, I mean, it's been swinging up, looking for the same kind of a pullback, but there's really nothing to get. I mean, just stay. This thing is, it's just been on a tear. So that's a bullish trend. The NASDAQ, same thing. The Dow transports, same thing. We're still in higher highs and higher lows. After this switch in polarity here, let's look at oil. You can see, this is going to be interesting. We have to get at least a change in polarity, which I think we actually have here on the hourly chart, or even here where we took out the old highs and we put in a new higher low. And this higher low or lower low did not take out this pivot. So as of right now, this thing's in a little bit of no man's land. If this thing starts to come up and take out these highs and we change polarity here, this could be a really nice setup for oil going higher. And again, I wouldn't do that except to go off of USO and look at it like this. So we have one up, 2 down, 3 up, 4 down. So 1, 2, 3 swings up. I think this thing needs to pull back probably to this 50% line at least before I'd consider really wanting to move in. And I have that target or that alert set, so unless this thing just takes off from here, which is totally possible, and then take out this pivot, and once it takes out that pivot, a bunch of people are going to want to get on here. That's when the market will drag it back down again. That's a great position, great potential to get in, because right now you can still see it's in nothing but lower highs and lower lows. However, we've had 1, 2, 3 pushes to the downside, and you usually get 3 or 4. It's that simple. So, at least seems simple to me. Gold, GLD. We had lower highs and lower lows. We had a break in trend here. We come back to a 50%. That is not a coincidence. Actually, it didn't even pull back all the way to the 50% of this trace. Came back to the old highs here and a little bit of undercut. Took off from there. Once it took out this pivot, we got up here and it pulled all the way back. That's easily below the 50% line of this trade, or of this swing, and that would be a great place to buy, actually. And now over here on the hourly chart, we have this should be, it's a higher high than that one off of these lows, and now we're just walking back and forth. My stop's under here. Technically speaking, if this thing broke down below this green line here, that could be a pivot, and then this pivot here, so I could move my stop to there just to really tighten this thing up, but I do want to give it a little bit of room. Alright, that's enough on stocks. Sorry it took so long. Let's flip to the bullish percent indexes. The industrials, flat for the day. The NYA, up a little bit, very little, 0.09%. The transports, flat for the day. The NASDAQ, up 0.6%. The SPX, minus 0.25%. The OEX, flat for the day. And the NDX, down 1.12%. So again, hold on. Tomorrow's the last day of trading into Christmas, and then next week will be a shortened week. So, yeah, just hold on tight. And when this thing flips on all the major indices, we will position ourselves accordingly. Until then, we'll just hold on. So, like I say, one more trading day till Christmas. Hope everybody's having a good time during this Christmas season. Take care, guys. Good trading, and have a great evening.